Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about SUPRAJIT Engineering. Has the bottom made in the stock and whether the consolidation will continue or not? So let's understand that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about SUPRAJIT Engineering, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow a channel, help you also ask me questions and seek out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For retail market or company talk or number of stocks you're holding, you can directly email me and we can work things out with a fee. And also if you cannot pay on Patreon, you can get the WhatsApp yearly membership as well. Now about the company, SUPRAJIT Engineering is in the auto ancillary space and was established in 1985, and they make auto components and it boasts of marquee clients. Primarily they make auto lighting and motion control equipments, speedometers, etc., and have global presence with clients across Europe majorly, and that is primarily the reason why the stock has not been performing that well over the last 6-8 months. Their clients include Maruti, Honda, Bajaj, etc. here in India, and there are many clients globally, as I mentioned. In terms of numbers, and these are September 22 numbers, so the market cap of the company is around 5,000 crores, just under that, and sales were around 720 crores versus 500 crores, so it went up by over 40%. So there has been a consistent jump on sales and on the you can say top line. Even probably 1 quarter back, sales jumped by 200-300%, but profit remained flat, and again profits came out say at 10% lower at around 45 crores. So that tells me that the margins have shrunk appreciably from say 1-2 years back, and it has shrunk even more from 3 years back. So you need to understand that basically people invest into stocks which make very good profits, and here what is happening is that sales are growing, so that is one part that is taken care of, but your bottom line is not expanding. Currently it is trading at 23 to 25 times FY24 earnings, 30 times current earnings, so reasonably priced but not ultra cheap, or you can say very attractive, because auto space altogether has not done that well over the last 4 years or so. So there are many companies, marquee companies, top brands which are coming at very reasonable valuation. So when you consider a small cap auto ancillary company, it needs to come in at further discounts than what SUPRAJIT is trading at the moment. There's decent combined promoter and institutional holding in the stock. In terms of performance, stock has done nothing over the last 4 years. So it's not about last 6-8 months, but over the last 4-5 years, it hasn't done that well. It was around 350 or so in December of 2017. Now it has been 5 years. 4-5 years, the stock is around 330-350. I think this consolidation or long phase of underperformance is coming to an end. I still believe that over the next 6 months, these things should bottom out for the auto ancillary space and all those spaces which are concerned with European operations, with the global operations. So companies that have you can say exposure to Europe and US should start performing from summer onwards. So probably this is the time to accumulate the stock in this region of 270 to 330. That's my call. So hopefully now stock performance and performance on the ground should be better from FY24 onwards, and results have been decent. I won't say the results are extremely bad, but yes, when you get into such stocks, it's better to buy in depression, in a real chaos. Say the stock goes to nosedives to 280, 290, that would be very good levels to get into, rather than just buying impromptu straight away. So why there is a slowdown for the stock and this whole industry altogether? The auto industry has been under pressure from FY18, and we are seeing that, and we thought that it will continue for 2 to 3 years, and from 2020 onwards things should improve. But then the pandemic struck, so shutdown accelerated the decline and all the pandemic and everything. Now things are coming back into shape, especially in Asia and in India. But commercial vehicle segment has been most hit. Even in India, commercial vehicles did well for about 2 3 quarters, and then again we are seeing a slump in that. So probably economic slowdown that hurt infra to the core over the last few quarters. I think things should get better from FY24 onwards. That's the call. Although people believe that next 2 years will be very difficult in Europe and US, I think stock prices should bottom out earlier than that, and I don't see a 2 year recession in Europe or US. But there is a perception that the projection is that next 6 8 quarters will not be that great for Europe and US, and that's why people are not getting into stocks which have exposure to those regions. But I still believe that things could get better from March, April onwards. In terms of technicals, there's a major long-term support around 300. That's why I said that below 300, closer to 280 would be very good levels to accumulate from a 3 to 4 year point of view. 360 is a resistance zone, and strong up move is expected above 400. So anybody who wants to trade short term, I believe, should look for the stock to break out above 360 with high volumes, and then only get into the stock. Otherwise, for long term investors, below 300 are good levels to get into it. I don't think that it is a very good stock to buy into from a short term point of view. So my call on the stock is that hold if you have it, and if you have it, then there's no need to worry. I mean, if you have it at 350, 360, 370, 340, 330, even in a little bit of losses, no issues. If you have it at very high levels, you can probably average it out around 290, 300 on major declines. But I don't see a point selling now because we are in the fag end of this cycle. I don't see this cycle continuing for 2 3 years down the line. Probably in the next 2 quarters or so, things should improve at least that much. It should improve that much that we'll see companies doing, some of the companies doing well, and on the ground things might get well by end of next year. But the stock prices could start performing earlier than that. So in all that respect, I believe that this is not the time to sell. In fact, this is the time to accumulate. If somebody has a 3 to 5 year time frame, then auto ancillaries and pure auto plays like iShare, etc., can be bought into in this type of scenario. Of course, you can do your own analysis and take a call. But this is what I believe, that the sectors that are ignored at the moment over the next 2 3 years should start performing. So I believe that cycle is turning around. You can buy on declines to 320 or 300. Best is around 290, 300 levels. Buy top players in autos. As I said, iShare would be my top pick here in this space. It's a 3 year play and no immediate reward. There could be a chance that after such a long consolidation, stock may start performing from January onwards, and a short term it would do well. But over 3 years, I believe that the stock should end up doing pretty decently well. And don't put more than 5% of your total holding into such stocks. So this was my video on Suprajit Engineering. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.